Welcome back. We're coming into the bottom of the hour. You're watching the Fox Business Network. Let's welcome back to the show Fox News contributor Scott Martin. Hey, Scott, we love having you on. You're a Wall Street pro. Okay, GameStop. It looks like the GameStop frenzy is game stopped. Are you worried that this is going to spread, this kind of bubble mania? It's going to spread to other sectors besides silver, besides these Redditor meme stocks? What do you think?
Well, it is game over, EMAC, and I think it's a lesson learned, really. I don't think it's going to spread as much as we maybe have thought that it would have on Monday, because if you look at the silver trade, it was kind of over by basically noon on Monday, by lunch. So it didn't last as long. You know, the GameStop frenzy, the Nokia frenzy, the AMC frenzy lasted several days. So I think that given that some of the shorts were taken out of, say, position, some of them were taken off guard, that allowed the GameStop frenzy and some of its counterparts to last a little bit longer. And next time, I don't think they'll be as surprised.
So this, there was a lot of talk about this being a morality tale about David versus Goliath, the little guys taking on the big guys, when it really was a bubble mania. I mean, this is terrible for investors in the market. People get hurt. They lose a lot of money. This is not just a morality tale. It's a really expensive game of financial uncle, right?
Yes, and frankly, EMAC, a game of arithmetic. I mean, if you look at what happened in GameStop stock, easy for me to say, over the last several days, EMAC, it rallied, 35%, 40%, 60% every, couple days here and there. And then it lost off of big numbers, a 30% drawdown, and then a 50% drawdown. And when you look at arithmetic and you see that we're losing, say, less amounts off of bigger numbers, 480 was near the top.
Yeah.
You start to realize how much money you're actually losing. Like individual investors, EMAC, were calling me, emailing me over the weekend saying, I don't understand how I lost so much money. I thought I made more than I did lose. And it's like, well, yes, but you were losing more off of bigger numbers. And so that, too, to your point, was a lesson to, I think, individual investors that there's no such thing as free money.
Well, yeah, and let's explain it this way, as one of my pals at a Wall Street shop told me. Let's talk about it this way. Let's finance a big chat room with crowds of day traders who artificially boost the values of shares and failing companies that are shorted, mall retailers like GameStop. And then you loan these inexperienced traders $150 against each share worth $300. This sounds like investing in a Ponzi scheme, right? I mean, so now we've got that happening. Now the question is, why doesn't the big board go and delist these companies when they drop into penny territory? Why is now Congress talking about fixing the problem with a wealth tax or a tax on stock trades when hedge funds have stopped Congress from enacting a tougher uptick rule, which would mean that you would have a firewall inside the markets where you cannot, basically short a stock unless it's on an uptick. I mean, we had that in prior decades. That's a natural fix, right?
Great point. And the regulators were out to breakfast, lunch, dinner, and a midnight snack on this one. And it got out of control. And I think to your point, the fact that this allowed to go on, EMAC, all last week was near criminal. It was allowed because it was within the rules, but it was a bad move. And I'll tell you what else happened along the way, too, was that on Thursday-ish, some sharks got in the water, meaning some of those big institutional investors started coming in and hedging, shorting these names again, whether it was with puts or just outright shorting the stock. And then if you saw what happened on Friday, a lot of those platforms that you referenced that some of the individual investors, the mom and pops, were trading on Friday, started cutting off liquidity to a lot of those investors that needed the liquidity the most to get out of the way. And they got stuck in those trades. They got trapped, and you weren't letting people out of the exits early enough. And now here it is Monday, Tuesday, and people have lost another 50, 60, 70%.
Yeah, so just, you just laid it out perfectly, Scott, and what the lay of the land there, what happened. I mean, so they're going to limit trading when they run out of capital to clear the trades. So that's what happened with Robinhood. Now, Robinhood CEO is going to talk to House Financial Services. He's expected to testify. Talk to me finally about Senator Elizabeth Warren wanting now a wealth tax, which is unconstitutional. And also, you would need an army of IRS auditors the size of Russia to enforce and appraise everybody's net worth, meaning the value of your houses, the value of your car, mark to market, what your net worth is. IRS officials have told me they don't want this. They hate it. They would need an auditor army, an appraiser army the size of Russia to enforce it. It is patently absurd. Breathtakingly idiotic is what one person told me. Your final thoughts on that? A wealth tax to fix this?
Yeah, words I probably can't say on TV, Emac. But think about it. Not only is the wealth tax very expensive on its wholesome, on itself, but the fact of enforcing it, the cost of actually enforcing the wealth tax is probably going to need its own tax. Because to your point, it would be so costly as far as people that would need to go out there and find these data points, find these figures. It's absolutely ridiculous and something that would really impair the U.S. economic growth picture.
Yeah, that's right. You'd have to. That's right. You'd have to raise taxes even more to pay for that IRS army to do it. Scott Martin, thanks for that great insight and your perspective there. It's good to see you, Scott Martin.
See ya.